Hey traders, Raghee here. Happy Thursday, everybody. Welcome to Charts and Coffee. All right, so let's get to it. Already got a crowd in the house. Awesome. Great to see you all. What are we rocking here today? Oh, a little bit of a Guatemalan Reserve from Volcanica. Getting ready for day 2 of Jerome Powell. Remember that just because day 1 kind of fared pretty well doesn't mean day 2 is going to go the same way. We will get the statement released beforehand, like we did yesterday, right? So that statement's already out there. And then the Q&A is where always the market's going to see how he handles the different topics, anything on inflation, jobs, growth. Clearly is going to be something the market's got its ear out for. So with that being said, great to see you all. Let's take some questions. Let's go ahead and tackle some questions here. First up is, what are my thoughts on figs? I like them. Figs are tasty. Who doesn't like a dry fruit? This one, look, the born on date, anchor a VWAP to the, I call it the born on date. What is that? It's the date of, our first date of trading. And so I don't have any game plan for this. I don't have any skin in the game in this, but here's what I'll tell you that I will do for stocks like this. And not a lot of data, still relatively new. So what I'll tell you is, again, anchor that VWAP. And then depending on whether this was an IPO or a DPO, depending on that, what you have is that quiet and holding period. DPOs, typically I will not look for longs. DPOs have a habit of selling off shortly after they go public. IPOs, keep an eye on the VWAP, be mindful of the quiet and the holding. And I usually don't engage IPOs until after the holding period is done. So not a lot of skin in the game, nothing really that I'll do with this, with a name. I like a little bit more data. I like a name that's typically attached to that broader narrative that is a sector ETF or an index. So interesting action, but again, not something that will usually end up on my radar, but well above the VWAP right now. Next up is Vish asks about TLT. Am I still bullish? Gosh, yes. Let me separate bullish from being a buyer at current levels. Really important to distinguish between the two. So if someone asks me if I'm bullish, well, I think you guys know at this point, if you've been joining me for Charts and Coffee for any length of time, Rag, go ahead and say it, double green. Right? So I've got this double green environment. Not only does that mean I'm bullish, it means that I'm going to be a pullback on the buys. And I think the most important thing is I'm not allowed to short, right? Double green tells me not allowed to short, Rog. Yellow, a transition to the lower row of this tool going to yellow. Well, then, yeah, at that point, I can start thinking about potential shorts. So am I bullish? Absolutely. But am I a buyer at the levels we're at now? Gosh, no. We were already looking for buys. We've had 3 dip buys. Here. Now, I'm not going to look at TLT for the setup. I'm actually going to look at ZB for the setup. So not TLT, but ZB. And so even though, like, for example, in the mastery, we got long TLT on pullbacks. Actually, our longs and pullbacks date back to, further back, but a dip is a dip, and the green, double green is what validates it. So yes, bullish, but not a buyer at these levels. So I hope that makes sense. And by the way, I'm going to be in the futures room later on today. And if you haven't checked out what we do in the futures room, yes, we trade futures. But remember, if we're looking at futures, we're looking sort of at a 40,000 foot view of the market. Understanding where crude oil is going, understanding where gold's going, understanding where rates are going, understanding where the broader indices are going, only makes you a better ETF and stock trader. So if you're thinking, gosh, yeah, I'm having a hard time understanding what's going on in the markets right now, it might be because you don't have your pulse and energy interest rates and the broader indices. So come check out what we're doing if you haven't already. And let's take the question on Tesla and Amazon. All right, so Tesla. Well, let's start with the obvious. What's my underlying market trend? Sideways. There's two rows of colors. This is not a fully stacked market. It was actually double red back in here. It was fully stacked with bearish implications. 1, 2, 3. This was a big deal right there. That was the breakout 1, 2, 3 pattern candle. And then, this is the market behaving a lot like ZB, the 30-year futures did after its 1, 2, 3. It broke the 1, 2, 3 and then went sideways. But once the 1, 2, 3 is broken to the upside, preferably also breaking the 34 EMA wave, I'm going to then shift to buy only mode. I'm going to shift then to a bullish directional bias. So yeah, I'm mostly bullish, but just think about Tesla for a moment. It's a laggard in every corner of the market that it's involved in. It's not the leader. In a market that generally speaking is moving higher, Tesla's not really been participating. And if I have that disconnect, it's far less interesting for me. And Tesla's not that different in terms of disconnect and not leaving it off my watch list. It's not that different in terms of figs. You might say figs and Tesla, what do they have in common? They're not on the watch list because of their disconnect. Figs because it's such a new stock and not weighted within the broader averages or sectors that are high volume and influential. And Amazon and Tesla because it is heavily weighted, but it's again disconnect. So if you find a stock that has a disconnect, in other words, it's not moving with the broader sectors or indices, that's not necessarily bad. The next step would be, is it a relative outperformer? So if you can see disconnect plus double green, you've got a honey badger. But if you get a disconnect in red or yellow on my JT multi, leave it be. So there's a quick checklist for you right there. So Amazon, yeah, it's moving higher. Weakness is going to be welcome for a buy. We're going into earnings season, gang. I don't want to be short much going into this earnings season. Not that I think earnings season is going to be, a smash or anything, but I don't want to be short double green names into earnings. Case in point, for example, yesterday we bought Merck. On that little dip, you can see the wick there, we bought Merck. Proximity to earnings, double green. And again, it's a matter of your checklist, not adding more opportunity to what you could possibly do. Your checklist in many ways should reduce, like a good filter. Take things out, take things out, take things out until you're left with the best example of what your filters would say are a potential trade. So Amazon, earnings proximity, double green alone, I can't short. And double green more means dips are going to be buyable. Will it be buyable at the 8, right? So that's the next question. That red dot right there, you see these 2 red dots right in here. Those are the 8 exponential moving average. Is that ideally what I'd like to see for a pullback buy? No, it's shallow, but it could be, I think that 8 exponential could be actually a pretty good aggro level for a pullback buy. So thanks for the questions on Tesla and Amazon. All right, next up. Hey there, Alex. Good morning. Bought calls on NTAP. Sure, 2 days ago on a double green pullback. Okay. Now, let me mention this. Take a peek at the previous pullbacks. I know you know this, Alex. You're part of the, you know this. You've been to Charts and Coffee. You know the process. Look at the last pullbacks. So nowhere should this be a surprise, right? That pullback in that red grab candle and that 55 exponential. should be part of the plan, right? Okay, so just putting that out there. So to the wave in a non-heavily weighted ticker, okay, we got nonetheless caught up in volatility. We have a red grab, poor analysis. No, not poor analysis. Maybe not, look, you found a double green. How can I say that's poor analysis? But maybe a little short-sighted, right? Look at the way the market responded before. So I hope my very, very high-level drawings on this chart saying, oh, right, Rag, I didn't look at the previous pullback. Yes, double green, but this is NTAP's nature. This is its characteristics. This is how it moves. So when you acknowledge that this is what it's capable of doing, and that's what the most recent pullback sort of looked like, then you apply that moving forward, right? They say a lot, past results do not, suggest future performance, but past behavior does indicate future behavior. And so, blue grab candles would have me looking for more blue grab candles, the possibility of. Red grab candles would have me open to the possibility of, you guessed it, more red grab candles. So no, not poor analysis at all, but don't ignore the behavior, the type of pullback that preceded the one we're getting now. All right, next up. Hey there, Alex. CL looks like yes. So yesterday, OPEC finally agreed to increase production and the market moved lower. And I think, I was going back and forth about whether or not yesterday would have been a good idea to buy. And the reason I didn't, let me give you the reason. I like being very, very transparent with the process. I think that on this side of the camera and the microphone, I talk about it a lot in the futures room and the options room and in the sector secrets room, that conscious competence, it's not easy. It doesn't come easy. I think most people are not consciously competent because we, at some point, just kind of, program and then let the program run. So we're not always so conscious of every little step. But then when you teach, you got to go back and realize, oh, that's how I was connecting the dots. All right. Having said that, I think the transparency of why I'm looking for something is going to not only, for me, make sure I'm putting a check in each box, but for you, you're going to understand why I'm doing something. Rog, why would you step into crude oil on the day that OPEC's going to increase production? Well, one, it was expected. And two, how much more the increase is where the volatility comes in and traders buying the rumor, selling the news. Well, crude oil has a habitual type of movement, as does every market. And so I know that once I exceed 1.9 points in a single session, that it probably will make sense for me to be patient and anticipate one of two things: a pause candle inside day or a minor low. There you go. All my cards on the table. What did I tell my sector secrets folks? How many folks are in the sector room? What did I tell you guys in the chat room yesterday after the sell-off happened? Let's wait till today, right? Let's wait till today. And so what do we get? What are we getting today? Blue grab candle, minor low, nice sinking into the 34 EMA on the close. Yeah, I'm going to be looking at CLQM micro CL, brand new contract that started trading Monday. And we'll get long USO again. I mean, USO is great. I mean, those of you in the sector room, we know what we did. We bought this, took profits twice, scaled out, trailing or break even. You know what I'm going to do again? I'm going to put a quarter back in the machine. That's what I'm going to do. So yes, love this pullback. It's doing what I want, which is after a day where we exceeded the 1.9 daily price movement range, I'm going to look for another opportunity. So you got it. You got it. And I love when you guys see that in the context of a trend. My gosh, please don't buy new highs. Most of the time, that's going to be very much a YOLO, FOMO, one of the O's, as in oh no type trade. Okay. So by the pullback, they happen less frequently, but I think they're going to be a superior risk reward. So like that one a lot. Thank you for the question, Alex. All right. CLOU. Hey, Debbie. CLOU. Double green, pulling back. Oh, a good bit. I mean, we're pulling back pretty hard. Options have a look. Yeah. So what I would recommend with something like CLOU, when you've got an ETF, the Tide, and it's really not great in terms of liquidity. We run into this from time to time on a lot of ETFs, unfortunately. However, what we'll then do is if the ETF at the Tide has your attention, let me take you on over here. Let me show you something. I don't know that I'm really queuing up anything within the CLOU, but let's take a peek. All right. So what do we want to do with CLOU? Who are the components within the CLOU? SHOP, Zscaler, Twilio. I think ZM is a little further up on this list now. So I think third spot is actually ZM, followed then by Twilio. So these things do shuffle up from time to time. This is not a high concentration weighted ETF. So you're going to notice that the first 10, 15, 20 stocks are very evenly weighted, which means you will see probably not new names all the time, but you will see this list shuffle up pretty frequently. All right, so having said that, I'm going to go through the list and I'm going to update the stocks that are heavily weighted within it as of now. None of them should be really, really new names to us. These are probably names that you've been looking at pretty frequently if you've been looking at the CLOU. So we have Coupa here, Netflix, Akamai. Okay, so this is what the top 11 look like. Okay, this is how I update and this is how I scan. What's not to like in CLOU? Not much, not much. So can you buy CLOU? Unfortunately, like you said, if the option chain is thin, you're gonna have to look at the next opportunity. I think that, especially based on the cost and the trend, a put credit spread with bullish bias in SHOP looks really good. We're getting closer and closer to that 21. The Tide is in an uptrend, double green. SHOP, the number one weighted stock, just under 5%, also in an uptrend. I'll say the same thing about Zscaler as we approach both the 8 aggro and 13 also aggro EMAs. Pullback buys work here for me. I would say ZM, your Zoom. I don't love this one. Again, know where you are in terms of proximity to earnings. If you're inside 2 weeks, be careful. But I would look for a minor low or inside day in Zoom. Twilio's pulling back to the 21 and the 34 EMA on the high, 4.5% of CLOU. Like that one a lot. Dropbox, I'd like to see Dropbox at least get to the 21, like Paychex is. Paychex is now in the zone between 13 and 21. And I would throw in CRM as well. CRM is down at a level that makes a lot of sense for a potential buy. All 7 of the top weighted names within CLOU look great. So I like the pullback buys. Now remember that from a weighting standpoint between SHOP, Zscaler, Zoom, and Twilio, you're talking over, right about 20% of the weighting within the CLOU. So I love the fact that all 4 of them are looking pretty bullish, as is the Tide. So I anticipate some volatility, but I am a buyer. Bullish in SHOP, bullish in Zscaler, bullish with a minor lower inside day on ZM, on Zoom, and Twilio at the 21. Absolutely. Absolutely. So too bad we can't play CLOU, but let me tell you something here. I think a lot of you will maybe have a little aha moment. I can buy the stock. Every single setup that I share with you all, whether that be in the rooms or here in Charts and Coffee, I'm not talking specifically about the options or the underlying or the futures. I'm talking about just that symbol, that ticker. So if I'm willing to be a buyer of calls in, say, CLOU, a $28 stock, I could actually also buy CLOU. Trading stocks and trading options are really not two disparate things. They're not disparate at all. They really should be connected. I should not be willing to buy a call at a price or in a ticker that I would not buy the underlying in. We just like the options because they give us some nice leverage, right? And protection, the ability to collect credit and things like that. So anyway, hope that helps. Thank you for the question on CLOU. Good stuff, Debbie. I like the structure of this one quite a bit. I'm not ready to look at gold quite yet. I do, generally speaking, like energy. Somebody asked me about natty gas. Yes, I do, generally speaking, like energies. Crude oil is pulling back. Natty gas is not. We've already built UNG longs on prior pullbacks. So you know what I'm going to say. I need a pullback. 21 EMA, preferably. We have natty gas inventories coming out today as well. As far as a new course, I have a new class coming up. We're going to have the webinar on August 2, I believe. I'll have to check with Trish. But we have the webinar on August 2 coming up. We're going to show you what we've been doing thus far in the Sector Secrets Mastery, the strategies that we've been using to actually, I will tell you, except for some bumpy times at the end of February, especially pushing through March, April, May, June, July. May, June, July have been actually pretty darn good. We've reduced our activity, but we don't get brownie points for being super active. So I'm going to show you the way that we've been managing 2021, the process, the trades, what we've been doing. And those of you that are in the Sector Secrets, we keep things remarkably simple. We are long calls, long puts, and mostly long calls. Once you understand how to get great at getting long calls, put credit spreads, call verticals, easy peasy lemon squeezy, because the margin for error on a long call is very little. You master that timing, everything else becomes, multi-leg strategies become a whole lot easier because you've got great timing and directional bias. So anyway, yes, that's good. We're going to have the webinar on the 2nd of August for what we've been doing in the Sector Secret. So looking forward to sharing what we've been doing there in that room with you all. Have a great one. Enjoy the rest of your Thursday. Heads up, Powell is due at the bottom of the hour. He was on at noon yesterday. He's on at 9:30 today. Okay, be good to each other, and I will see you in the futures room at 10:30 Eastern. All right, until tomorrow.